The economic engine in America has come to a crashing halt. And many of us are right now sequestered at home, a home that we have to pay the rent on at the end of the month, or a home that we have mortgaged and we have payments coming due. I know my fellow entrepreneurs and small business owners are suffering right now, and small businesses are the real backbone of this country. Over the last 15 years or so, over 65% of all new jobs come from entrepreneurs. And this has really got me concerned. Is this an early indicator that the real estate market itself is about to crash? Let's dig into this. What's up, y'all? It's Joe Master Lee here, sharing insights on how money works. And today, I want to talk about the real estate market, in particular when it comes to paying rent. Because at the end of every single month, the great equalizer in life is that we all have to pay rent or a mortgage loan. I mean, the reality is that housing is very expensive, and most of us have to pay a huge chunk of our income in order to have a roof over our heads. And unfortunately, when our income starts to dry up, we have a huge problem as a nation be able to pay down that biggest chunk of our bills every single month. And unfortunately, unemployment has just skyrocketed in this past week. I made a video about how bad it's gotten when it comes to jobless claims. In this past week alone, over 3 million people had filed for unemployment, which is a 10x fold higher than when it was the previous week. And that's not even the tip of the iceberg, y'all, because economists are predicting that by summer, unemployment could reach about 15 million people. And those 15 million people undoubtedly will have a difficult time paying down the rent or their mortgage. In fact, the vast majority of Americans, 85% or so, don't have an emergency fund set up. And while I'm very thankful that the government has been able to pass an economic stimulus package that's worth over $2 trillion, the reality is that giving Americans about $1,200 each is only going to last about a month or so. It's going to help alleviate that immediate cash crunch necessary to pay the next rent check. But what happens for the following month and the month after that? All signs are indicating that we are in this economic shutdown for the long haul, because despite how much the government is doing to stimulate the economy, and despite how people are trying to band together to try to survive this, the reality is that we can't control the spread of this health crisis right now. We just don't know when it's going to end. And the problem with paying rent is not just something that affects individuals. It's affecting businesses across the nation as well. Just in the last week or so, big companies like the Cheesecake Factory have pretty much told its landlords that we can't pay rent, so good luck on trying to collect a rent check from us. And we're talking about other companies like Mattress Firm, Adidas, but the big one here is Subway.
Did somebody say Subway?
I'm in the middle of making a pretty important video here, Ludette.
But I'm really hungry.
All right, how about this? Wait till I finish making this video.
I got it!
Let's go eat, and I'll explain to you why this is big news. You see, the thing is that even though McDonald's by far the most popular fast food restaurant in the United States, the most amount of fast food shops, however, is Subway. 25,000 shops across the United States. That's almost double of what McDonald's is. So when you compare that to something like the Cheesecake Factory, where there are only about 200 some Cheesecake Factories in the United States, 25,000 Subway shops is more restaurants than McDonald's has, and that's even more than the number of Starbucks that are out there. This is a big deal when they say they can't afford to pay rent for the following month. What happened to all the vegetables, Ludette? Many of these companies are claiming a force majeure, something I've seen in contracts over and over again when I used to do business development. But it was always one of those things that made you go like, you know what? It's just a line item, ain't big deal. But in essence, what it states is that if there is some act of God that happens, then that can nullify this contract. An act of God being, well, something like a health crisis that's been going on right now. Now, some analysts are saying that these companies are telling their landlords that they can't pay rent as a negotiation tactic, as a way to be able to lower their rents. But even if that was the case, we know in the next couple of months, more and more companies are going to run into a very similar issue, that this is just a tip of that iceberg. big businesses, small businesses, restaurants, retailers. There's no getting around the fact that just about every one of these businesses is paying a huge chunk of their income, their sales, to put in a roof over their heads, to have a storefront establishment. We may think that the average person may not be financially responsible, and that's the reason why they don't have enough savings set aside to be able to pay more than 1 month of rent. But the reality is independent businesses, whether it's restaurants or retailers, don't have enough cash set aside either to last more than 3 weeks. So in other words, this country tends to run best when cash is constantly flowing versus one piece of this cog hoarding cash and setting it aside for, a year or two. Very few people do that. They're constantly reinvesting or, just spending money. But that's how the economic engine works. It's not necessarily a bad thing that cash is constantly flowing. In fact, that's usually a very positive sign that the economy is constantly growing. So when so many of these tenants, whether it's individuals or businesses, can't pay rent, is this an early warning sign that the real estate market is about to take a massive hit? Let's dig into this. We tend to think of the battle of tenants versus landlords as some sort of David and Goliath story. But when the economic engine has come to a halt, we can see that it's actually a David versus David story. Because while tenants may be feeling the pain today, landlords are feeling the pain tomorrow. Most landlords borrow heavily in order to be able to acquire and manage their properties. Just think about it. How many people do you know actually spend cold hard cash to buy a house? If they did, chances are they're probably in the mafia or money laundering in some way. Very few people do that. Being able to borrow a huge chunk of cash in order to buy property and invest in it is considered an American dream. Our country is designed to provide massive incentives for people to borrow money for housing. Our government provides pretty low interest rates overall in order to facilitate borrowing. We have massive tax breaks for people who are homeowners. And we have a population that is generally always growing. We are incentivized to do it. The American dream is built on doing this. People do it, businesses do it. And the amount we borrow typically is such a huge chunk of cash that we will rarely be able to have enough money to set aside to be able to pay that down if our income streams dried up. So when tenants can't afford to pay their rent today, landlords can't afford to pay their loans tomorrow. And if enough landlords can't afford to pay their loans tomorrow, you could be sure that a month or two later, the banks are going to be coming to knock on the door to start figuring out, what's going on? And if you default on that loan, they will come, take your property, and it's foreclosed. And despite how much we think that banks love doing that, the reality is that's not their core business practice. No bank loves going through the practice of having to acquire property and having to resell it. There are easier ways for them to make money. And let's say these banks do foreclose these properties. Well, now we have a situation where a whole bunch of properties are flooding the market and there aren't enough buyers. In particular, since the economy is slowing down and people are already starting to rethink, do I put huge chunks of my capital here into investing into a new property? The housing market is already slowing down on one side, and now this influx of foreclosed properties hitting the market is not going to help. Even with an interest rate right now set at a historic low of 0%, I don't think a lot of people are going to think about this situation as, I'm going to invest in some real estate right now. They're going to wait it out to see if things stabilize first before that happens. For those of you who are following the real estate market, we have seen tremendous growth over this last year. And in fact, all the way up to about mid-March or so, we've been seeing pretty healthy gains. But in the last 2 weeks of March, we are starting to see the first signs of the industry buckling. Slight declines, the kind of declines that we haven't seen in the real estate market in quite a long time. And so we have this economic engine around the housing market. And we have these different cogs that keep the engine running, right? We have the tenants, we have the landlords, and we have the banks. I guess you can also say there are the builders as well as part of this housing market economic engine. But if any one of those suddenly stops, and in this particular case, it starts with the tenant, the next cog starts to stop and the next one as well, and everything comes to a standstill. With the housing market, this engine is part of an overall larger engine, the economic engine. So when the housing market comes to a stop, you can be sure there's going to be some pretty significant impact to the overall economic engine as well. Although you could probably argue in this particular case, some other part of the overall economic engine caused this massive slowdown in the economy, which has affected the housing market, which, as you can imagine, everything is just coming to a grinding halt. It is the end of the month, you all. And at the end of the month, about $40 billion in rent is due. And about 1/3 of all Americans right now can't afford the basic necessities in life after one rent check is due. The economic stimulus package may buffer some chaos created this particular month, but let's be real here. This health crisis that we're in hasn't even peaked yet in the United States. Many of us now have been sequestering ourselves for the last 2 weeks. And what was supposed to be just 15 days of social distancing has now been extended by our government to 45 days. Our efforts to flatten the curve will continue. And it's hard to say if 45 days is enough to help control the spread of this virus.
I'm just gonna stay on this side of the house.
Now, the government has done some dramatic things to curb the potential of the real estate market taking a hit while we're in the middle of a health and financial crisis. They have forbidden both foreclosures and evictions for the time being. A rare move that speaks to their concern that the domino effect I've been talking about here could happen. But just how long can they prop up the real estate market? And how long before entrepreneurs and small business owners are able to get back on their feet and start creating jobs in this country? Aria, what do you think? For those of you who are much more immersed in the real estate market, do you think we're on the cusp of a real estate crash at this point? Or is it merely just going to be a slowdown until everything kind of just picks back up again? Now, I don't think it's going to be as bad as the 2008 recession where the whole housing market collapsed, because that was the crux of what that recession was. That was what caused our whole nation to go through many years of recovery. In this particular sense, we're talking about another cog in the economic engine that is affecting the housing market. But I guess we're going to see right now how well the real estate market is going to be able to weather this particular storm. Hang in there, you all. We're going through some pretty crazy times. And with that, peace out.